Hello and welcome to another episode of Everybody Counts, Malone Bailey's official podcast. Thanks so much for tuning in today. My name is Caroline Rosen and I'm from the marketing department at Malone Bailey. I am really excited to be joined today by Patrick Wong. He's one of our senior audit managers. We're going to be talking about topic 842, which has to do with new accounting guidance for leases. So welcome, Patrick.
Well, thanks for having me today.
We are glad to have you back on. We know that this is not your first podcast.
Correct.
So hopefully the first time around was fun enough for you to come back for a second round. So thanks for being here today. Before we dive into the topic, just a really quick overview of our podcast. Everybody Counts is a podcast that features a variety of different topics. So it could be anything from practice management to soft skill topics, and then of course topics pertaining to accounting and regulatory updates and much more. So we cover lots of different pieces of information, and the wonderful thing is we have lots of great guests that come on, whether they're from inside our firm or outside. You are sure to hear lots of different perspectives. So as I mentioned, we're talking about new accounting guidance for leases. Okay, so almost all companies, regardless of industry or capital structure, are lessees. Whether the nature of the company's business requires the use of real estate, equipment, or trucks, leasing is a very common financing arrangement, and for every lessee, there is a lessor. So some typical examples of lessors include finance companies that specialize in equipment lending, equipment manufacturers who finance customer purchases of their equipment, and also property owners, and this includes REITs. The new accounting guidance for leases significantly changes the lessee's accounting by requiring that lease-related assets and liabilities be recorded on the balance sheet for substantially all leases. Understandably, much of the media focus, as well as the preparer and user community's analysis and discussion, have been on the lessee's accounting changes. The new standard also modifies the accounting by lessors. While the basic framework for the lessor's accounting is unchanged, the guidance has been amended, and that's what Patrick is going to talk about today. So Patrick, I want to turn it over to you. What are some of the key changes of the new accounting guidance for leases?
Well, the first major change, I believe, is it revised the definition of a lease. Some contracts that are written as like service arrangement may now include an embedded lease.
Okay.
Leading to lessor accounting by the supplier and lessee accounting by the customer.
Okay.
It also requires the accountant to identify the lease and long lease component. For example, a contract may contain multiple lease component or long lease component that needs to be accounted for separately. Like maintenance service provided by the lessor is an example of a long lease component. If a lease involves like a land and another asset, such as building and equipment, the right to use the land is by definition a separate lease component.
Okay.
It also amends the lease classification criteria to distinguish among like a sales type lease, a direct financing lease, and an operating lease. The new standard use principle that require judgment. It eliminates the bright lines in prior GAAP. Okay. In addition, the new standard revised the criteria for a sales type lease of real estate by eliminating the requirement to transfer title to the lessee by the end of the lease term. Another change is it applies the same sales and leaseback accounting model to all assets. There's no longer any distinction between a sales leaseback for real estate versus a sales and leaseback of equipment. It also eliminates specialized accounting for leverage lease.
Okay. All right. And so I do want to point out really quickly that we're going to be providing really a high-level overview of topic 842, but we do recommend that you go online to the FASB website where you can find a very detailed overview of this new accounting guidance. So be sure to go to the FASB website. Also, if you go to the Malone Bailey website, the resources section, you can find this very topic, and we'll provide a link directly to the FASB website as well. So that's another option. Okay, so let's keep going, Patrick. So when do the changes of Topic 842 go into effect?
Well, public company must adopt this new lease accounting standard for annual and interim period beginning after December 15, 2018. For example, a public company with a calendar year end must adopt the new standard effective January 1, 2019 in the first quarter ending March 31, 2019.
Okay.
If a public company has a fiscal end in, let's just say, June 30th, it must adopt no later than the first day of fiscal year 2020, which is July 1st, 2019.
Okay. All right. And so I think this is my last question to you before we wrap things up. Can you share the top 4 tips for lessors to prepare for the new lease accounting rules?
Sure. I think number 1 is get up to speed on the new rules.
Okay.
The more knowledge you are about the new rule, the stronger position you're in to prepare for the change and educate your stakeholders about what's coming.
All right.
Second, I think you should educate your dealers and vendor about the new standard. Emphasize to them that the fact there's no revenue recognition impact for operating lease regardless of the finance provider.
Okay.
Next, the company might want to address internal consideration. Right? You should understand the new rule and consider how the new rule will impact your company internally. Understanding the proposed rule and their application will support compliance across the enterprise, from sales generation to internal and external reporting. Also collaborate with your internal accounting standard group, internal and external auditors, regulator and software provider upfront on how the new rules will be applied in order to mitigate costs in the future. In addition to accountant, underwriters and business will need to revise contract, adjust projection, monitor confidence, and manage internal budget accordingly. And I think lastly, the company might also want to consider engaging professional help. You may need to hire a consultant with specialized skill for technical knowledge, process documentation, control compliance, and system development. Also, you might need to temporarily help you to do research on lease documentation and perform restatement analysis. Resources to evaluate transition decision will be needed. Lastly, changes in lease contract will need to be addressed early for legal compliance.
Okay.
Yep.
All right. Well, thanks for those 4 tips. And we appreciate you being here to provide this overview of Topic 842.
Thanks for having me.
Yeah, absolutely. So we're not going to let you go just yet. We're going to switch gears for just a moment, and we've got a question for you. It's completely unrelated to the topic we've been talking about today. This is called our This or That section, where we throw 2 options your way, and you tell us your preference. So we are recording this podcast just a couple days before the Thanksgiving holiday. And I know that you're a big sports fan, so I'm sure that after your Thanksgiving meal, you're going to be watching some football, right?
Sure.
So we've got a Cowboys versus the Chargers game on Thursday. So is it going to be the Cowboys or the Chargers? Who are you going for?
Cowboys.
Cowboys?
Yes. Yep, in Texas.
Right, okay. Well, go Cowboys. Thanks again for tuning in to our podcast today. And thank you, Patrick, for taking time out of your very busy schedule to be here. Hopefully we'll have you on again in the near future.
Absolutely.
And for all of you listening in, please be sure to check out our website. That's www.malonebailey.com. The resources section houses our podcast. You can find past episodes, as well as links to our external newsletter, which provides lots of great accounting and regulatory updates as well. So thanks again, and we'll see you guys next time.